TSLY, or the YieldMax Tesla Option Income ETF, as it sits today, is offering investors somewhere around a 62% distribution rate and could be one of the highest yielding ETFs I have ever come across in my entire career investing in the stock markets. Now, in this video, we're going to go over what the TSLY ETF is, how it works, and what it has to offer. Then later on, we are going to see exactly how long it would take an everyday dividend investor to turn just a $1,000 initial investment into a $100,000 portfolio if said investor was to buy into TSLY and reinvest every single one of those massive dividends along the way. Now, if you're interested in high yields and dividend investing, stick around because I promise you, you are not going to want to miss a thing. So heading over to the YieldMax ETF's website, it says TSLY YieldMax Tesla Option Income Strategy ETF. And it says right here the distribution rate is, as of current, around 62%, which still shocks me every single time. Now, a little bit about this ETF, it says the fund does not invest directly into Tesla. So even though TSLY uses Tesla as a reference stock, it doesn't invest into Tesla specifically. And I've talked about this on previous videos, so definitely check those out. But the way that YieldMax does this is they use something called a synthetic cover call strategy. And by using options, basically creates a synthetic cover call, which is in some ways similar to a regular cover call, which I'm sure many of you guys are familiar with or at least have heard about. Here on the website, it also shows all the distribution details when it comes to TSLY, at least since the fund's inception. Now, looking at some of these dividends that this ETF has paid so far, back in February of this year, we see a 90-cent dividend that was paid. Then in March, another 90 cents. Then in April, 82 cents. Then 44 cents in May. So from April to May, the dividend was almost cut in half, which is definitely going to happen because of the strategy of this ETF. Keep in mind, because the YieldMax strategy of using the synthetic cover call strategy, the dividends are not necessarily going to be the same every month. It really depends on what the reference underlying Tesla stock does within the time frame. But to look at the rest of the distributions, because this is going to be important, especially when doing the math to try to figure out how long it would take for an investor to possibly turn a $1,000 investment into $100,000. In June of this year, we had an 80-cent distribution, then $1.06 in July, 83 cents back in August, and then basically 58 cents was paid back in September, October, and then as of recently in November. Now, some more details on the fund, which is of course also important. There's currently $757 million in net assets, and another important piece of information, the gross expense ratio, almost 1%. So because of this ETF strategy and because of how actively managed it is, investors looking to buy into TSLY are of course going to have to pay much more than that than other ETFs across the markets. Next, I think it's important to go over maybe one of the most negative aspects of this ETF, because if you're watching this video still as of right now, you might be thinking to yourself, well, this ETF pays a massive dividend on a monthly basis and it has since inception. This thing seems too good to be true. And although this ETF has paid massive dividends, this is one of the worst parts about the ETF. What we're talking about here is the ETF price decay. And to give you an idea of how bad it's been, back in November of 2022, this ETF was trading at around $21.76. And as of today, as of filming the video, we're at $11.39. So even though an investor that's been holding in theory was paid massive dividends along the way, their underlying investment is shriveling up, down almost 50% since the top. Now, the obvious argument against this, of course, is that, well, if you were to reinvest the dividends, or at least some of the dividends along the way, you wouldn't necessarily be down all that much, and I'll show you the exact math in this in a second. But regardless, the ETF price decay is something to consider when investing into a fund like this. Now, to give you guys more of an idea of what TSLY's true total return is, which is price return or lack thereof plus dividends included. If we stack up TSLY next to Tesla, the underlying reference stock that TSLY basically tracks, we can see that using total return, which is once again price return plus dividends included, on the 1 month time frame, TSLY is down 3.06%, where Tesla is up 8.17%. Over the last 6 month time frame, TSLY is up 5.41%, where Tesla is up 28.62%. Now, this right here is where a lot of critics really rag on TSLY, that even though TSLY is paying out massive dividends on a monthly basis, investors that bought into Tesla, at least over multiple different time frames, would have been up more money and been better off. And on top of that, might even pay less taxes, which we're not going to get into the tax implications because I'm not an accountant and everyone's tax implications are different, but I'm just saying. But year to date, we can see that TSLY's returned 48.38% so far, and that's 325 days so far, which I'm not going to sit here and lie, a 48.3% return, year-to-date return on pretty much anything is very impressive. But Tesla, on the other hand, for investors that bought into Tesla, let's say at the same exact time, are up 116% which is absolutely crazy. Now, stretching things out a little bit further on the 1 year time frame, this is where things get kind of dark. TSLY on the last 364 days, with all the massive dividends included, because of the price decay, is actually in the red somehow, down 2.67%, where Tesla is up 37.84%. So although we don't have all that many different timeframes to go through because TSLY is relatively new, we can still see that pretty clearly there is a good argument, at least for argument's sake, that investors that buy into the underlying Tesla might be better off than buying into TSLY altogether. But regardless on whether or not TSLY is or isn't a good investment, the numbers are the numbers, and we are going to see exactly how long it would take in theory an investor with a starting principal of just $1,000 to turn that $1,000 into $100,000 of TSLY if the dividends were reinvested consistently. So for this model, and keep in mind this is just a model, these are all just numbers in theory, take this all with a grain of salt. An investor with a $1,000 starting principal, a 50% initial annual dividend yield, which is somewhere up around what we could expect TSLY to have. This could of course drop down to 40, 30, or 20, or it could go up even higher. We don't know, but let's just go with 50% to start. Dividends are going to be monthly and DRIP is going to be turned on. An annual contribution on top of the $1,000 is $100 on top of that. So this investor is going to be adding another $8 or so per month. Let's see exactly what we get. So an initial $1,000 investment in TSLY would be giving an investor around $632 in dividends per year. Those are reinvested plus the $100 annual contribution, and by year number 2, a $1,600 principal portfolio would earn around $1,034 per year. By year number 3, $2,600 and around $1,600 in dividends per year. Now skipping through a little bit, by year number 7, this portfolio would already be up to $15,400 and almost $9,800 in dividends per year. By year number 10 years in, this portfolio would in theory be at $56,000 and $35,000 per year in dividends. By year number 11, $87,000 with $55,000 per year in dividends. And by year number 12, $134,000 portfolio with $84,000 per year in dividends. Now keep in mind, this is if and only if the dividend yield stayed at 50%, and of course, if all the rest of the numbers stayed steady. But regardless on what you think about TSLY or other high yielding ETFs, they do in theory have a chance to be able to create compounding machines long into the future. But of course, they can be risky because of things like ETF or share price decay, along with a simple change in dividend yield, and this entire situation will be thrown off. Now, lastly, I'm going to leave you guys all with this. What are my thoughts on TSLY, and do I have any TSLY in my portfolio? As of right now, I do have some TSLY in my portfolio. It's currently less than 1% of my overall holdings. Now, will TSLY ever be a large position in my portfolio? At least as of right now, it will not. TSLY in my portfolio as of right now is much more of what I would like to call a gamble position, where I buy a few shares here and there, because as of right now, the shares are just too cheap to pass up and the dividend yield is still so high, at least as of right now. And I fully expect things to change in the future when it comes to something like this. Now, as always, do whatever you want to do in your portfolio. If you feel like TSLY should be a larger position in your portfolio, by all means, do whatever you want. But for me personally, I'd much rather buy into ETFs and stocks with much more consistency and much more of a strong foundation. But when it comes to TSLY, now I want to hear from you guys down below. Do you currently have any TSLY in your portfolio? And if so, comment how many shares in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.